Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with the European Session Outlook. We'll start with the North American markets, where we had the housing starts month on month, 31,000 better than expected at 1.211 million. Building permits month on month, 8,000 worse than expected at 1.152 million. Industrial production month on month, 0.4% better than expected at 0.7%. Capacity utilization, 0.3% better than expected at 75.9%. And the CPI data came out overall negative. The consumer price index 0.8% rose 0.8% compared to a year ago. The core CPI, which strips out the volatile food and energy categories, rose 2.2%, lower than the 2.3% yearly change in June. The cost of food was unchanged in July and has risen 0.2% over the past year, the smallest increase since the 12 months ending in March 2010. Energy prices declined 1.6% and are 10.9% lower for the year. Real hourly wages, those which account for inflation, increased 0.4% in July, more than reversing the 0.2% decline in June, and wages are up 2% over the year. We had a speech by Lockhart. Fed Lockhart was cautious on the margin, stating one rate hike in 2016 only could be appropriate rather than should, which echoed the sentiment of the earlier Fed Dudley speech, which was a lot more hawkish. This has helped the USD back off its Dudley-induced gain and refocus on the CPI miss, as Lockhart reminded the market that some signs could show uncertainty and a slowing economy, and not locked in to any particular monetary policy outlook right now. Given the data uncertainty, which continue to be the two biggest factors for the USD and future hikes going forward, he still doesn't rule out a September hike. Overnight, San Francisco Fed President John Williams said the central banks should consider aiming for higher inflation than the current 2% target. The current target is not well suited for the new low interest rate era because there is simply not enough room for central banks to cut interest rates in response to an economic downturn. The Dixie is down to 95 from 95.30. And today we have the FOMC minutes, which will be very interesting. In the European markets, European stocks closed in negative territory Tuesday, but gains within the commodities group kept the decline somewhat in check. The key ZEW survey of German economic sentiment found expectations were at 0.5% in August compared with minus 6.8% the previous month. The ZEW current conditions survey came in at 57.6 for the month compared with 49.8 in July. Germany's DAX 30 ended down 0.6%. And today we have the ZEW survey expectations from Switzerland. All right, on to the UK markets. We had CPI year on year, 0.1% better than expected at 0.6%. PPI data as well. PPI input month on month, 2.3% better than expected at 3.3%. Year on year, 2.3% better than expected at 4.3%. PPI core output year on year, NSA, 0.2% better than expected at 1%. PPI output month on month, NSA, 0.1% better than expected at 0.3%. PPI core output month on month, 0.3% better than expected, and year on year, 0.3% better than expected at 0.3%. The pound strengthened against the dollar and erased earlier losses against the euro after data showed that UK inflation accelerated in July and there were signs of further price pressures due to the weak currency. CPI, or consumer price growth, picked up to 0.6% from 0.5% in June, still well below the Bank of England's 2% inflation target, which was last reached in December 2013. This is the first set of consumer price data since the country's decision to quit the EU. Manufacturers' costs for materials and fuels jumped an annual 4.3% in July, the fastest pace in 3 years. Still, the surge may not worry Bank of England officials yet, since policymakers have indicated they intend to look through any inflation generated by the currency slump as they add stimulus to bolster growth. The FTSE 100 was 39 points up, closed at 6,927 yesterday. Onto the Asian and Pacific markets, the New Zealand participation rate for the second quarter was 0.9% better than expected. The unemployment rate in New Zealand, 0.2% better than expected. At 5.1%, the employment change, 1.8% better than expected. And Asian shares were mixed early Wednesday, a day after China signaled its intent to further open up its equity markets to foreigners. Late Tuesday, China said it will throw open a trading link between Hong Kong and the tech-heavy Shenzhen exchanges, while scrapping important limits on how much foreigners can invest in the country's stocks in an effort to entice global investors into its markets. Japan's top currency bureaucrat issued a fresh warning Wednesday over the soaring yen, saying the government would have to act should it rise too sharply. And the last section for today, the commodities. We had the API weekly crude oil stock, bigger than expected 1 million barrel drop in US crude supplies. That wasn't expected, but gasoline supplies jumped 2.2 million barrels for the week ended August 12th, a worrying demand signal well ahead of the end of the summer driving season. The gold prices extended overnight gains in North American trade on Tuesday as disappointing US inflation data tempered expectations of a near-term interest rate hike by the Fed. Crude prices remained at their highest level in more than a month on Tuesday as market players continued to digest market-moving comments from Russia, Energy Minister Alexander Novak in the previous session. Gold had a range of $17 down to $13.43 now. Silver had a range of 39 cents at 19.77 now. WTI crude oil had $1.40 range up to 46.28, and natural gas is trading at $2.60 at the moment with a range of 5 cents. And that was all for today. Thank you for the attention. I will see you next time. Goodbye.